from where you sit. When you talk about real estate, you get the attention of many Kenyans, with many of them hoping to invest in something that is worthwhile and they can be able to get a return on their investment. Well, join me as we take a tour of the mall. We'll be talking about real estate investment and what are some of the opportunities for various people in the market. I'll be speaking to Nozipho Makhoba, the CEO of Stanlib Fahari, just trying to understand what are real estate investment trusts. Come for this interview. Thank you for joining us on the program.
Thank you for having me, Abi.
And let's just kick it off. And many Kenyans have been seeking to invest in real estate. Some have had an easy run, others have burnt their fingers when it comes to being swindled of their money. And there's this jitteriness that comes when people hear real estate. I don't know, how would you describe the real estate sector in Kenya?
The real estate sector currently is a little bit fragmented. We have a lot of people that own real estate directly through purchasing of land parcels and so on and so on. And then you have real estate being owned by different pension schemes, different insurance companies, different property developers. And when it comes to the listed property sector, right now there's only one listed property fund, and that is Stanlib Fahari I-REIT.
All right. Speaking about Fahari I-REIT, explain to me like a 5-year-old. What does this I-REIT mean? Is it? It's a really interesting term, and just break it down for us.
So, Abi, a REIT is a real estate investment trust, which is a unique real estate vehicle, and it has as its very unique feature the tax efficiency of the structure. So a REIT basically is exempt from income tax because by nature it has to follow a flow-through principle, which means that the earnings and the incomes of a REIT are not taxed within the REIT itself, but they get taxed in the hands of the investors. So it's one of those very attractive investment vehicles because it gives the investors that tax benefit. However, that benefit comes only if a REIT complies with certain minimum requirements. One of those requirements is the distribution of its earnings. For example, in Kenya, a REIT needs to distribute at least 80% of its distributable earnings within a certain period of time. For example, with us, Stanlib Fahari I-REIT, we need to distribute within 4 months of the end of the financial period. That is within 4 months of 31st of December every year. Whereas in other geographies, for example, in South Africa, that minimum threshold is 75%. So there are other requirements that need to be met just to make sure that the REIT is able to maintain that tax-free structure.
All right. So if today I want to get on board a REIT, what is required of me as an investor?
So the REIT is the listed one that we run currently, Stanlib Fahari I-REIT, is a closed-ended fund, which means we don't keep on offering units to people as they come and approach us. However, there is a secondary market for our units. So a person can buy the units through a broker or directly through the NSE by just doing a trade, basically to get those units.
All right. And let's expand this conversation right now, Nozipho. The REITs industry in Kenya is not fully advanced, if you may ask me. And what are some of the key projects you have as Stanlib that you've rolled out in the Kenyan market?
We are very much aware that awareness of this new and exciting product is not really that great in the market. So we are partnering with various stakeholders, one of them being the REITs Association of Kenya, in terms of any awareness projects that they are undertaking. You might recall that in 2018, the REITs Association of Kenya ran a very successful inaugural conference,
yes,
which had speakers from different parts of the globe, from America, from South Africa, from different parts of the world, to just highlight, to bring some more knowledge into the market about what REITs are, and also comparing it to other markets, just to see how did they succeed, especially markets that have run or operated REITs for numbers of years. For example, America has had REITs since the 50s, the 1950s. So it was very interesting to hear how those markets have actually been able to make REITs a success. So we partnered with them, and we were one of the sponsors. We actually were the gold sponsor for that occasion, and they run quite a lot of things just to make sure that we shine a light on this investment vehicle.
Right.
And of course, there are other things that we do when they are speaker sort of like opportunities to just speak about what REITs are. We've partnered with institutions like ISPAC, the Institute of Certified Public Accountants in Kenya. We've partnered with the likes of RICS, that Institute for Chartered Surveyors, so that anytime there's an opportunity to talk about REITs, we sort of like spread the message. There is also other conferences that we also still want to be part of in terms of advancing the message. Those are, for example, the East Africa Property Investment, which is also another very nice forum for us to be part of.
All right. And speak to us about the size of investment so far that you've been able to attract, and how much you've been able to invest in your portfolio.
So far, our portfolio is standing at about 3.7 billion.
Wow, that's a substantial
shillings.
amount.
It is substantial.
For a young product in the market.
It is substantial, but our target is still to grow the portfolio much more than that.
Okay.
We currently have 4 properties in our portfolio. We have the one that we are at now,
Greenspan Mall. Yeah.
We have a new asset that we bought in 2018, an office building located in Lavington. We have 2 smaller industrial, semi-industrial and office properties based in the industrial area in Nairobi.
All right. And when you look at this performance of the product so far in the market, would you say there's been a good uptake? Are there still gaps? And how do you intend to address this moving forward?
I think for now, the uptake has not been to where we want it to be.
Sure.
I think you'll recall that when we went to market, we had targeted a minimum of 10 billion.
Yeah.
Not a minimum, sorry, we had targeted about 10 billion. Of course, our minimum threshold was about 2.6 billion.
Yes.
So we still have big ambitions to reach that 10 billion. So the uptake is, I think, there has been a bit of hesitance in the market, but I think because we've been able to demonstrate a good track record for the fund, I think we are receiving more and more sort of like inquiries about how can I invest in a REIT, more inquiries about just how people can get involved, which is a positive sign in terms of warming up.
Do you feel this low uptake perhaps could be linked to uncertainty about the legitimacy of such a product, where people are asking, is it a legalized kind of product in the market? People are seeking to know, has it gotten the right approvals? Because, hey, everyone wants to make an extra coin. At the same time, everyone wants to guard their money to avoid being fleeced by unscrupulous business people.
Yes. So the REIT is a very regulated instrument. We received our license from the Capital Markets Authority. They run routine sort of like supervision programs now and again. So it's basically a very safe investment. If you look at our governance structure as well, we have the trustees overseeing our activities. That's an independent body. Currently, that role is fulfilled by the Cooperative Bank of Kenya, independent of the promoter and the REIT manager being Stanlib Kenya Limited. So there's various tight governance structures. We have our board overseeing our decisions and our activities, as well as the investment committee. So there is a very sound sort of like environment in which the REIT operates, which safeguards the investors' monies.
All right. From where you sit, of course, one of the biggest concerns is to grow a portfolio. And to grow a portfolio, you need to work with the landlords who you would want to be in partnership with, so that you can roll out more products in the market and, of course, expand the scope of your customer base. Are you currently trying to get new properties, and how soon should we expect you to float this?
Certainly, Abi. We are really on an aggressive growth path. So our strategy is to partner with the pension schemes, as well as insurance companies who are currently overweight property, just who are wishing to rebalance their portfolios. So what we are targeting right now is unit for asset swaps that will allow us to get those properties in return for units in the REIT. So that's one of the strategies we are really working hard at ensuring that it is realized from this year onwards. Just taking advantage of the regulatory environment currently. And
as we wrap it up, Nozipho, of course, any investor is also very keen about the risk element. And what are some of the quick challenges you can bring up when you look at the kind of product you're dealing with? Because as much as you are trying to lure people to buy in on your products, there is risks associated with these products. For instance, if we have a turbulent election, for example, in a country where you see property prices dipping and of course a slow uptake, and people are not hitting the level of returns they would want. What are some of the big risks for you that face your business? At the same time, what are some of the regulatory risks that are inherent around rates?
From a market performance perspective, some of the key risks that are there in the market, and we are also not immune to them, is basically vacancy risk. Sometimes you might find that tenants don't renew their leases at expiry, or they encounter business failure, and in that way they need to be evacuated from our premises. So I think vacancy risk has been quite an issue.
How do you navigate through this? It's a very dicey affair.
Yeah, so I think the property market is a very or property asset rather, is a very dynamic asset. When, I'll just make an example, when Nekumat failed in 2017, it caused quite a lot of discomfort for landlords who were exposed to that particular tenant. We also had other tenant failures in the market, but just check how those landlords have been able to bounce back. They've been able to find replacement tenants. We've had the attraction of international retailers coming into this market to basically take up that space. So when risks such as vacancy materialize, it's not always like all like hell and doom, but it actually is an opportunity to revise one's tenant mix and basically attract even better tenants, who knows. So for us, we also apply a similar approach, just to be vibrant and to keep up with the changes in the market and keep on checking what leasing strategies one can actually employ in order to counter that risk.
All right.
You also asked about other risks in the market, rental pressure, for example. What we've seen in the market recently is a downward pressure on the rentals. We've seen the market transform into a tenant market, with tenants bargaining for less rentals. Some landlords have been driven to offering 6 months to 12 months rental free periods. Because of the pressure that they were basically encountering. And that's basically a function of different things. Either it's a slowdown in the economy, what has been happening in terms of the interest cap that happened in the market recently.
Oh, yes.
Interest cap law, and many other factors. Oversupply also of stock in the market has also driven the rental prices down. But in our portfolio, we've been lucky to enough that when our tenants renewed their leases, especially in this last round of renewals, we were able to at least maintain our rentals where they were before. Instead of escalating them, we at least or getting a discount on an overall basis, we're able to maintain our rentals where they are. From a regulatory perspective, we have encountered challenges, of course, in one area, and that is the tax certainty that is currently lacking. So currently, what is happening in the REITs structure in Kenya is that the Tax Act, Income Tax Act, is very clear in terms of the exemption of REITs from income tax, which is a very good thing. However, when it comes to the exemption of the subsidiaries of REITs, there's a bit of a gap. The Income Tax Act does not provide clarity or does not expressly exempt the subsidiaries of REITs from income tax. So that currently is something that has been worked on very extensively with the various stakeholders, the regulators, and so on and so on. And we're very hopeful that we are at the end of this challenge, that we are going to be seeing an expansion of the regulations to basically incorporate the exemption of the subsidiaries of tax of REITs in Kenya.
All right, and Nozipho, if you had to describe the future for the real estate market in one word, what would you say?
It's optimistic.
Thank you so much, Nozipho Makhoba, the acting CEO for Stanlib Fahari I-REIT, speaking to us, just trying to break down matters to do with the real estate and some of the prospects that the sector has to offer in light of where we are seeing the trends heading. Well, this interview now paves way for market analysis as we take a look at how the markets have been performing on this Thursday.
The biggest challenge that is in the property space is that the market is not growing as fast as it was previous years. So right now what we are seeing is a lot of high unoccupancy rates in most of the properties.
It's time for the market analysis, and this week we shall be speaking to Marceline Gatebi Kialo. Thank you very much for joining us from Kingdom Securities. Marceline, we're seeing the markets bouncing back after a turbulent faster quarter really, and we're also in the earnings season. A lot of banks posting their results, a lot of the listed companies actually posting their results. Let's just quickly start off with the NSE 20 share index. I'm seeing this week it's down by 0.44%. and it's standing at about 2,848 points. What do you make of this?
If you compare the markets between this year and last year first quarter and now into the second quarter, you will notice that as of last year we were in a much better position compared to this year. And so far what we have been able to observe even in the markets currently is that there has been a lot of net sell-offs even from foreign investors. And also again, I think when it comes to the financial results that are actually being released, we have seen a lot of investors reacting to those results. When it comes to good stocks like Kenya Re, which already reported a decline in profits. We have good stocks like banks. Some of these banks are also having some declines. So the share price has really been impacted in the market, and that is what is leading to the NSE 20 share index dipping.
All right.
Yeah.
You've talked about quite a number of companies there, and in a clear sense, there's been a very interesting twist in the latest few months. We are seeing the likes of Britam posting a loss of 2 billion. We also saw UPL Mutual Holdings posting a loss of about 600 million shillings. Should the investors be worried?
Well, not necessarily, because I believe some of those losses are being attributed to one-off costs. Like for UAP, it's a restructuring one-off costs, which is not bound to be repeated probably in the next coming financial year. And also, for example, a company like Britam, they had losses which have been actually been attributed to a decline in the investment income. But so far, we are optimistic that the year could improve when it comes to the performance of the equities, of which now that could actually contribute positively now to the insurance firms' positive results. So basically, we expect a reversal in those results. If at all now we are going to net off the one-off restructuring costs and improvement in the performance of the equities.
All right, and just listening to President Kenyatta during the State of the Nation address, he did talk about how the handshake has brought about some stability in the markets. We are seeing the Kenya shilling holding quite steady at about 100 to the US dollar. But let's move this conversation forward, Marceline. Looking at the top gainers this week, I'm seeing Stanlib Fahari. The stock is up by 32.97%. What could be defining this now that you're seeing some renewed activity when it comes to people going for the real estate sector with these various instruments in the market?
For Stanlib, they announced their results last week on Friday, and they were quite good actually. And so far, I think for Stanlib Fahari and the regulations underlying the REITs investments is that they have to pay off at least 80%, or they have to distribute their net income at least 80%. So I would attribute the rallying of the stock basically to investors who are looking to tap onto the dividend income of Stanlib Fahari.
All right.
Yeah.
As you've heard earlier on, we spoke to the acting CEO of Stanlib actually, and she was quite optimistic. Over and above her being bullish about the markets, they are still scratching the surface. If you look at the targets they had, it was at about 20 billion, and they hit 6 billion. What sort of headroom do we have in the property space?
I think the biggest challenge that is in the property space is that the market is not growing as fast as it was previous years. So right now what we are seeing is a lot of high unoccupancy rates in most of the properties, like where now Stanlib Fahari rather has some investment in, like in the Greenspan Mall. You will find that they're not having 100% occupancy rate, and I think that is basically the norm now even around the commercial properties. So in terms of the prospects and the outlook for Stanlib Fahari, I don't think it's really well supported by the outlook for the real estate, but more so coming down now to just the rewards that they are giving in the market. Because like for example, if like now it's already clear that IFC and Liberty could actually sell off their shareholding in the REIT, but definitely they are not going to do it because they are going to do it at a loss, because now it's a capital loss. So I think the prospects are not all that good, but definitely now for this period, this season, I think investors are just looking to tap into the income, or rather into the profits from the dividends that they're going to be distributing. All right. Yeah.
I'm seeing a very interesting stock here, Marceline, on the top losers, Uchumi. And it seems not to bounce back really. The stock is down 11.67% with a valuation of 60 cents. What could be happening with this stock? Is there hope for this stock?
Uchumi is one of those stocks that have received a very big beating in the market, and I think basically it's because of what has been happening with the company. If you look at, for example, the number of branches that they have closed, this week we are talking they have already hit 2 since the year began, and right now they're operating at around 10 branches countrywide. So I think looking at the prospects for Uchumi, they don't look so good. And again, also now with the suits being filed in the courts from different suppliers, I think they have a long way to go. And now that they haven't probably even spotted a strategic investor who can pump in capital so that they can come out of their debt, I think the prospects are quite gloomy for Uchumi. That's why probably they are receiving that beating in the stock market.
Do they need a strategic investor? Yes or no?
Yes, but I would look at it from 2 different sides.
Okay.
There is the capital aspect, but also they would need some expertise from a retail, from an investor who actually has some experience in the retail market, because that is what now they actually need, just to re-strategize and see what they can do better.
All right.
Yeah.
It's so far not so good. Thank you, Marceline. Very insightful insights there around how the markets are performing. Well, it's time for us to take a look at Markets 101 for this week. Well, time for my favorite segment, and that is Question on the Street. This week's question comes from Sam Gishuru, who is asking, what is a profit warning?
Thank you, Sam, for asking that question. A profit warning is basically a cautionary statement that is usually given by a listed company when it's expecting to declare profits which have lowered by more than 25%. Over and above 25% or 25% and below. So it's just a cautionary statement for investors to actually take caution when they are dealing with the securities of that company.
All right. Many thanks there, Marceline. Very clear. And of course, it speaks volumes when it comes to domestic matters. When someone comes home and tells their wife, I have a profit warning. Well, we now want to take you down memory lane on historical fact. Marceline, finally, we bring it to a close. Thank you for your time.
Thank you, Abi, for hosting me.
All right, Marceline Gatebi Kialo from Kingdom Securities. Well, that's all the time we have for you here on the show. Remember, you can always engage with us on our social media handles appearing at the bottom end of the screen. And remember to always share your feedback with us. And on behalf of the entire team that makes this a success, we wish you a lovely weekend ahead.